What's up, everybody? This is Tim Sykes. I am back from my European vacation, feeling a little bit better. Got a little overwhelmed searching for wedding venues, trying to trade with jet lag and traveling every few days. So it's been a rough few days for me. But I finished my European vacation up nearly $20,000, which is pretty cool to show that I can trade, although far be it from perfectly. Missing opportunities left and right, but still nailing a few. And finishing solidly up for the month that I was in Europe, even while I'm sick. Most importantly, this is what I'm getting the most questions about, this ITKG trade that I had, not because of the trade in itself. I bought, it was a contract winner. I thought it would run. It didn't. I gave it nearly 48 hours to run, and it still didn't. But my exit was last Friday. And in the alert, I said, not going anywhere fast and the overall U.S. stock market continues to fade. There's a real possibility of a crash next week. So I'm playing this safe, basically a scratch. Trade extra safe in this market. Remember, the bull market is 6+ years old. We're due for a crash or at least consolidation. And most happen in September, October. Excuse me. I still have a little bit of a cough. A lot of people are asking, how did I know the crash was going to happen? I didn't know that there would definitely be a crash. I saw signs of a possible crash. That is what the most successful traders and investors do. We look for signs. I should mention that there are less than 10 seats left for the Trader and Investor Summit, my upcoming conference, live trading conference, October 3rd through 5th. And we are going to have over 10 millionaire traders teaching, and some of us will be trading live. But what you will learn from all of us is that we look for signs. And there are some great examples of signs. This is what the market actually did do. This is the Dow. And, I gave that sell alert on that stock and kind of my market commentary. It was right before the big crash. It was right on this day. On Friday the 21st. And I didn't know, that we would have a huge crash. I didn't know that we were going to rebound big. I just saw us fading a little bit, and knowing, as I talk about in my Tim Tactics DVD and How to Make Millions DVD, knowing specific days of the week, specific times of the years. This is very important. You should know that September and October are very dangerous months, and that, you also happen to have Black Thursday, Black Friday, Black Monday. So you have to be very careful when you start seeing fading action. I didn't know that we were going to drop 1,000 points within the first few minutes. I did have an idea that we would see lower prices. So that is why I got out, and I told everybody else pretty much to get out of stocks. And that turned out to be the right call. It was like midday here, so I think the Dow was like at 16,750. So saved roughly 1,000 points on the Dow. But what you can learn from this, I'm not trying to brag, oh, look at me, I called the crash. There's a lot of people making a lot of calls every single day. What I want you to learn from this is I saw a few indicators and the odds were too high for me to be invested. And that same kind of logic applies to some stocks where the indicators are too great, so it's, stupid of me not to be invested. For example, my Ford trade. This is my biggest winner during my European vacation. I just missed the latest run up because I was traveling, although I said, specifically in the watch list before it happened, I expect a gap up to the low to mid twos, and that's exactly what happened again. But what happened the first time I bought this earnings winner on some late day strength, holding its gains well, tons of support in the 120s, big morning spiker all the way to 4-ish, given how AQXP ran on the day too, pre-market / morning spike, this could easily get to the mid ones. Blah, 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 10 cents of downside. And this was on, what days exactly? August 11th, and I got out on August 12th, and I made nearly 40% on my money. And why is this important? Because the indicators were there. Let me just show you. So it had already done the big spike all the way up to 4, and I was buying it on a massive dip here in the 130s. And the next day, actually it opened out at 170, 180-ish pre-market. It was up to the 230s. But when you have a runner like this, especially when it's based on earnings, it doesn't matter what the naysayers say about penny stocks and the naysayers say about an earnings report. If the stock can spike big, it can spike big again. That is the beauty of earnings winners, and it just showed it again in the past few days. When you have indicators like that on your side, you gotta dip buy. If I was wrong, so what? I'm buying it at 130. I've already done video lessons on that trade, but I just wanted to bring it up. Excuse me. You see, I'm still not totally better, but I wanted to make this video lesson because I'm getting so many emails from people. I do want to highlight two specific emails. JM said, thank you for teaching me your rules as you kept me and my small hedge fund safe today. That was on the 1,000-point crash day. You know, a lot of people went to cash or even went short when I said that on Friday. And then RJ said 100% cash, not losing a penny today. So, you know, I'm not some genius where I'm like, oh, we're definitely getting a crash, short the whole market. And, you know, I banked. I just saw signs that there could be a big drop. We're due for a drop. You have to understand, you know, where everything is in perspective to the daily chart and the monthly chart. And that's how I knew, you know, Ford could spike again and again. Same thing with AVXL. A lot of people are asking me about this. I made this video. This was July 26th, right before I left for my Europe trip. And it was at 75 cents. And I made this video and I called it the best biotech penny stock play right now. And I had no idea that the stock was going to double. This was, you know, before here. And over the next few days, it doubled. So I was dead on. What I did know was that, you know, Seeking Alpha had teased that the headline of an upcoming article was that, you know, this small company may have just cured Alzheimer's. So there was a massive indicator. The stock was uptrending on record volume, and you had that hype-ish sounding article coming out. So the indicators led me to believe that it had more upside than downside. This is how you should view every single trade. What is the upside? What is the downside? How strong is the indicator? And if you start doing that, you know, you'll be surprised if you focus on the right stuff. You know, focus on volatile plays. Don't just focus, oh, this company has a positive news release. That's one indicator. But how is the reaction to that positive news release? You know, it's not just about the news. It's about the price action. And once you start combining price action with news and looking at seasonality and chart you know, indicators, namely like stocks breaking out to new highs or breaking out past recent highs, or stocks, you know, fading. You start to combine these indicators and you start having odds on your side. That is what all the successful traders that will be speaking at my upcoming conference and I have learned. Getting the odds on your side, even when you lose on a trade, it's still okay because the odds are on your side. I'll give you an example here on AVXL. This is later. This is while I was in Europe, and I actually shorted it because I thought that it had gotten a little too high, and I shorted it at 147.50, and this was on August 5th. So I just want to show you, this was right here where, you know, I was shorting in the 140s near the highs, and it wasn't the exact high. You know, the previous day it got to 160. Here it got to 165, but I was shorting it. What was my average price? 147.5. Thinking that, you know, it had topped, it had gone too far, and that it could come down. And sure enough, it did go all the way down to 1.1 on the day. I didn't collect all of it, but I shorted because I thought that this run-up was too much. And the indicator on the day when I shorted was that, you know, the morning spike had failed. So it looked like it was going to be actually a morning panic, which is pretty much what we got. If you keep it simple like that, can a stock do a morning spike? Can a stock do a morning panic? And it's a volatile, low-price stock, and let's say you're buying, you know, earnings winners or contract winners, and ideally the market is going up in the background because 3 out of 4 stocks follow the market. Or if you're shorting, you know, you want to short a stock that's up exponentially, perhaps on media hype, such as this, where, you know, maybe they did cure Alzheimer's, but the product isn't going to be ready anytime soon. The stock probably got ahead of itself. So having a basic thesis like that and including that thesis, if price action, you know, concurs, if this just keeps breaking out to new highs, I don't care how overhyped you think it is, the stock's price action is going against your thesis, that it would be a good short. So if you're shorting a stock, you don't want the stock hitting new highs. I know that sounds, simple, like, oh yeah, if you're betting against a stock, you want it to go lower. You would be surprised at how many people go into any trade with a thesis and say, oh, I have to be right. I don't care that the stock is moving against me. I know I'm right. If you do all this analysis on an earnings report and you say, this is an amazing earnings report, and the stock just does nothing but go down, and you say, the market is wrong, I am right. No, the market is never wrong. And we, humans, are often, often wrong. So go in with a thesis, look at the news, but make sure that the price action complies and is going with your position. If you're buying a stock, you want it to keep making new highs. Or if you're dip buying a stock like I did with Ford, at least you want to see strength, after hour strength, pre-market strength. You want to see, I had a 40% profit overnight. That doesn't happen very often. But you want the price action to be going your way. It is foolhardy to fight price action when you think a stock has to do something. You are nothing. I am nothing. We are nobodies compared to the stock market. The market is made up of buyers and sellers, thousands of people, tens of thousands of people sometimes buying and selling. That is the market. Any one individual, unless you're some huge hedge fund, which I'm not, and I don't really know anybody like that, we do not matter individually. And I'm not saying that to put you down. I'm saying that, to put you in your place. Just like I have to put myself in my place sometimes. When a stock is going against me, I have to cut losses quickly. But when a stock is doing what I think it should, then that's cool. Then I can make 10, 20, 30, 40% in a day or two. And if you add up those 10, 20, 30, 40% gains, trade after trade, more trades than, every now and then I'm going to have a losing trade. That's how you grow an account exponentially. It sickens me. It absolutely sickens me that so many people are still just shooting to make 10 or 20 or even 30% on their account year over year. And they think that's a good year because that is what mutual funds and CNBC and the Wall Street Journal has taught you is good. And anybody who says that they can, grow an account exponentially is the devil. And what I teach is voodoo, or that I'm a fraud, and that it's manipulation, or that it's luck. It is none of the above. It is strategy and it is discipline on trade after trade. And if you think the market is going to crash, then you can sell everything. Okay? It sickens me. I get sickened a lot. I'm sick right now. But it sickens me that even if, let's say, the best mutual fund manager in the world found out that there is going to be thermonuclear global war tomorrow, they would still go down 65% usually invested in the stock market, because that is what the charter on most mutual funds require. They require them to remain a certain percent invested at all times. You cannot make a bigger mistake than thinking that you are a mutual fund or a hedge fund and that you have some kind of charter or some kind of diversification requirements. You with a small account are better than that. You have no requirements. You have no board of directors. You have no political bullshit. You can control your account. You can go 100% invested into the market when you think that the market is going up. And I'm not saying 100% invested in one stock, but I'm saying you can invest all of your assets in a bullish stance, or you can take all of your assets out and have 100% cash, which is most of the time the best trade possible so that you stay liquid and ready for better plays. Or you can even short the entire market, or, some people like using leverage. I don't like doing that. But the point is that you with a small account are kind of like the guerrilla fighters that led America to its freedom from Great Britain. Great Britain had their massive armies, and they would march on these small towns, and then the guerrilla American fighters would pick them apart one by one, hiding in the trees and being a sniper. You guys are snipers. You do not have to invest or diversify and try and make 10, 20, 30 bullshit percent per year. As more and more people start growing their accounts exponentially. I know I only have a few millionaire students and only a few more people are making six figures per year, but it takes a while to learn my weird ass strategy and my weird ass thinking after years and decades of brainwashing from these quote financial titans, which is really, just pure entertainment, and it should not be taken seriously. That's why CNBC's ratings are at all-time lows and my subscribers are at all-time highs. You have to focus on strategies that work. So in the coming weeks, I want you to be extra, extra, extra careful. I know you're going to be careful at all times if you're my student, but you need to think about how far we've come over the past decade. We have come a long, 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 long time without much of a drop. And this little drop, it's only August, guys. We're not out of the danger zone, okay? So we've come back already. Everyone's like, oh, it's a dip buying opportunity. Maybe. Or maybe this was, the first shot that is going to foreshadow a bad September and a bad October. I don't know. I can't predict the future, but I do recognize signs. And after 6-7 years of a bull market, I am very, 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 very careful in my trading. And that is why when the major market indices are all red on the year, my accounts are up over 120% this year. Nothing huge, nothing like 500% or 1,000% like I know my strategy is capable of if I was aggressive, but I am playing it safe. And every now and then, I'm picking an earnings winner like Ford to dip buy, or a biotech stock like AVXL to buy, or a pump and dump like NUGN to short. I pick and I choose very carefully. There are plays, but you do not have to be in a play every single day, every single hour. You don't need to always have a position. So much of the time, the best trade is no trade at all. And I know that sounds weird. And I know, my kind of thinking where I think, okay, I'm a retired trader and I'm only going to come back into the market if a play is good enough. I know that sounds weird for somebody who is a full-time trader and a trading coach. But having that mentality, thinking that you do not have to trade, allows you to sideswipe these big market crashes. And, some of you guys are aggressive enough where, okay, Tim, you think that there's a market crash? Let me short. That's fine. I don't mind that. But what I do mind is when you think that, you're too big to, get out of the way of a massive market tidal wave. If you think a crash is coming, you don't need to remain 65% invested or even 10% invested. You can get out, and when everybody else is panicking, you can be liquid in cash and be ready. And as it turned out, there was an opportunity to dip buy. If you bought into that 1,000-point crash, there were some great deals. I wasn't quick enough, and I don't think many people were. And it's okay. You don't need to nail every single play. There will be plenty of plays this week, but what you can never forget is that all it takes is one bad trade to blow you up. One time where you're too over aggressive, one time where you think that you're bigger than the market, one time where you think that you cannot be wrong and you bet 50% of your money or all of your money, or you even use leverage and you bet all of your money plus some. And I know far too many traders, too many gunslingers who have done that, and they've blown up weeks, months, sometimes even years of hard work of building their accounts, and they don't like talking about it. That's why they don't share their trades transparently on Profitably. I'm not the fun guy because I want everybody to share their trades transparently. But in other chat rooms, other newsletters, other gurus, people lose huge, huge, huge portions of their accounts, and then they act as if it never happened, and they don't like it when I bring it up. But I remember, because guess what? That is what you should always be guarding against. That lack of transparency, that lack of risk management. I might be too much of a coward trader. It's true. Sometimes, I play it too safe. A lot of people have said that about me. I'll say that about myself. But you will not see me play it too aggressively. That is a mistake I have learned over the years not to make. Once upon a time, I did. My hedge fund lost 35% after being up roughly 65%. We still finished up over 4 years, but it destroyed my credibility. It destroyed my track record. It destroyed my confidence. And since that time, I have never invested big or dangerous, and I have lived a much healthier, happier, more consistent investing life. And that is what I want from you. So in these coming months, when it might be troubling in the overall markets, do not be afraid to go all cash. Do not be afraid to just sit out an hour or a day or even a week and wait for good plays, because there will always, always, always be good plays. Always. The only question is, will you be prepared to capitalize them? Will you have the money set aside and be like, okay, I can buy this stock or I can short this stock whenever the next great biotech hype play or earnings winner or pump and dump to short comes around? Too many of you will be, oh, I would love to trade this, but I'm in this other position, I can't get out. Or, I'm just not mentally prepared, or my schedule doesn't prepare you. I want you to be fully prepared, especially in these coming months where we could get a lot of downside market volatility, and a lot of people are going to be asking, what do I do? Is the stock market over? I'm so scared. The answer is, don't ever be scared of the stock market. You can always go to cash if you're ever in doubt, and then just wait it out. And so this week I will be looking for more earnings winners, more plays that are hitting new highs, more good dip buys, more of the same, shorting pump and dumps, shorting stocks that have technical breakdowns. The strategy doesn't change in a bear market, but it actually works better because there's far fewer plays. So you'll get the 40, 50, 60% gains in a day or two because the stocks move so much quicker because all the traders, focus in and zero in on the same plays. So I actually hope that we get a bear market. I would like to get more sleep and have less plays to choose from, but I'm not biased. If we have more of a bull market, that's great. If we have a bear market, that's cool. I don't want to try and say, I think this, I think that. Market guessing games are bullshit. But when the indicators are there, if we're going to get a fade and we start fading on a Thursday or a Friday, be careful because you might get a crash on a Monday or a Tuesday. So stay safe in this market. Get in the chat room. We have nearly 1,000 traders chatting every single day now. And, it's just a very good resource. Not necessarily that everyone is so smart in there. No chat room is like that, no matter what they claim. But the cool thing is you see what plays are hot, and you can use the chat room to build your watch list, to see what all the other traders are trading and see what kind of themes are hot. So I'll see you guys in the chat room. I'm going to get some more sleep so I can continue to get better. See ya.